Hello and welcome to firststepsinforex.com. Today is Sunday the 27th of March 2011 and we're looking at the euro-dollar daily chart. Right, so where have we been? Well, if we look on the chart over the last few weeks, we've been going on a nice upward trend. We've hit the trend line, started to hit here, hit it multiple times here, all the way along here, and we've just closed just above it on the Friday of last week, which is very suggestive that we're going to continue going up. But before we make a prediction, let's have a look at the weekly chart. If we look at the weekly chart, you can see that obviously, as we said, in the last few weeks we've been going up, and we've hit the same level as before. So we've got what potentially is called a double top situation. So we might have a reaction and break down through, but we'll have to see. This line here, which let's have a look at it, is the 1 point. It's around 1.2600. So it's not a major round number, but it is the Fibonacci, 50% Fibonacci retracement from this high here to this low, which could be significant. Okay, and if we apply other Fibonacci's, let's try from this high down to this low. That gives us another possible target in the future. We've got a 61.8% there and another 61.8% there. And then if we do a Fibonacci here, this double top down to this low, and look, we've got a 78.6 and a 61.8% in exactly the same place. So that would be around this area here. So that would be a very interesting target for this long to go to. When you have a conjunction of these Fibonacci retracements, it gives a powerful indication that something is about to happen. Okay, so we have a strong indication of a retracement, so that would be a good target. Let's go back down to the daily. And we can see that during the week, last week on Tuesday, we had bounced off this top. So actually we've got a 1, 2, 3, 4 bounced off, and that's why we reacted. But now we're hitting on this trend line. The trend has been up for a few weeks, so chances are it will continue. So I believe on Monday, when the market opens, and we don't do anything until the UK Euro opens, we're likely to go higher. Okay, we can, if we wish, look to go higher once we've gone above the high of the previous day's close on Friday. But if you like, we can go down to the 4-hour chart, and we could, in theory, go higher. You see here, this is like a pin bar, or in the parlance of the Japanese candlestick, it's like a hanging man. Okay, so that's a reversal signal, and we've almost got a double bottom, treble bottom here. So chances are, even on the 4-hour chart, we're going to rise. Let's go back to the daily, but let's see what happens. Okay, I'm predicting it's going to go up. If it does, then you need to choose an entry point. You could wait until you're back above here, but you're missing out on the big opportunity. So what I would do is, once if it goes above the high of the last 4 hours on Friday, and go long, and you only have to put your stop loss a few pips before, which is only maybe 20-30 pips down. So it's definitely an opportunity to for a good trade, because we've probably got a very strong reversal opportunity here. Target area could be all the way up here. Okay, ultimately, with probably some corrections as we're going back up, because if you go back to the daily, we seem to be very attracted to this 1.50% retracement area that we had before. Okay, so because we've got such a strong upward trend in the past, it's likely to continue. Okay, because there's such a momentum behind it that it will require something pretty major for it to reverse. Okay, so let's see what happens tomorrow. We have to wait until the UK Euro Open, but I believe it's going to carry on going up. If it doesn't, and it goes back down, because we have to be prepared for the possibility, then you could go short as soon as you've broken the low of that previous day. And in fact, on the daily chart here, this is a bearish outside bar, these two combinations. This candlestick here is outside that candlestick. The open and close of this one is greater. There's a greater difference in the open and close of this one, okay? And this is higher than that one and lower than that one. So and because it's a negative bar, it's called an outside bearish bar, because it's outside the previous bar and the bar is bearish. That can be a reversal signal, quite a strong one. So go low, go short if we go below there, which is around 1.40, let's say 1.400440 on this 5-digit thing. So on this 5-digit measurement. So, but you'll see it visually on your charts, because that's a strong, potential support and resistance area. And then, you could draw another line in, saying that's your target. And look, it almost got hit here. So that's a minor, got hit here, got hit here. So actually, that is another support and resistance area. It's not even just a standard support. There you go. Because it's bounced off here, it's bounced off back here, it's bounced off here, bounced off here, bounced off here. So if we break through it, next target will be down here and then down here. So it's a good shorting opportunity. To be safe, to go long, wait until we're above here, or we'll go back down to the 4-hour chart and maybe go above here. And you've got a tight stop, just put a stop just below here, this trend line and this support and resistance line. We've got a conjunction there, things bouncing off a trend line and this support and resistance area. Okay. So, and because of a strong trend in the past, it's likely to go up. But this is also a bearish signal. Okay, so let's wait to see what happens on Monday when the UK Europe opens up before we make a decision. Alright, that's it for now. If you want to know more about how I trade, then please go to www.firststepsinforex.com. You can register there, and then you can get a free ebook and free videos. So thank you very much for watching, and I'll hopefully upload in a few more days. Thank you. Goodbye.